Welcome, everybody. This is Eric Palmer. We're going to get started here in just a couple of minutes. If you'll notice in the lower right-hand corner of your screen, you have a chat button. So at any point throughout this training session this morning, if you have questions or comments or things you'd like me to expand on, please feel free to click on that button, send me a quick message, and I'll try to get to it here within this presentation. We're going to give it just another minute. We have quite a few folks here joining in right now. I want to make sure I give everybody a chance to get logged in. So hang tight. We'll give it another minute. Okay, and those of you that are just now getting into the system here, welcome. We're going to get started here just a second, but if you'll notice in the lower right-hand corner of your screen, you have a chat button that you can click on at any point throughout this presentation. If you have questions or comments or things you'd like me to cover, please do not hesitate to send the message over, and I'll try to get to it here in this presentation or make sure that we follow up with you at the very end. So this morning what I want to do is talk about a few different things to kick off September. You'll notice right now on the screen, if you're logged in here successfully, you see the Boomer Esiason's real life story. And of course, September is Life Insurance Awareness Month. And as we're kicking this month off, I want to kind of talk about a few things here first, just related to some of these general pieces that we can make available to you guys here to help create some more conversation. You know, it's not just about the IFL lead generation programs or the educator lead program. It's also about the additional tools we can give you to help create conversation with either existing or new prospective clients. And so I want to talk a little bit about that, but then I'm also going to get into talking a little bit about some of our dailies and some of the social media clips and articles that we found recently that have been really effective through social media and some email marketing. And then I'm going to show you some couple of quick pointers in the IFL presentation that are related to questions that IFL members have had about the presentation and some of the information. So let's go ahead and just kick this thing off here officially. Again, Life Insurance Awareness Month for September. There's a really good piece that was put together by Liam, L-I-A-M, and Liam is the organization that caters the Life Insurance Awareness Month, and they pair up with Life, which is a nonprofit organization that focus on educating individuals and consumers about life insurance and the need for life insurance and so on. So these two organizations have paired up with Boomer Esiason, former quarterback, and I'm sure most of you, if not all of you on the call, know exactly who Boomer is. And he's become a spokesman, and he has a really good story here about a time in his life when he found that he really needed life insurance. And they've put together some great follow-up materials. And these are being sponsored by AXA Equitable, one of the partner carriers here at Brokers Alliance. And if you've ever written any large cases with us, AXA tends to be that company that we turn to. And so they've been a good partner, and they provide great materials such as the ones that you're seeing right here on the screen. So within this document here, there's a couple of things I just want to quickly point out, and this is material that everybody can get their hands on. So at the end of the presentation, we'll send our follow-up email. Keep your eye out for it, and you'll see the materials there attached in it. But what's interesting is in his life, as he was growing up, his mother had died at age 37 of cancer, and they left the father and the two teenage sisters alone with Boomer to kind of carry on for themselves. And at the time, it wasn't necessarily easy having to commute to New York City, so they had hard times, if you will. And he really talks on here about the need for life insurance and how his mother died without life insurance, and it's interesting kind of this point of view, because a lot of times you think, well, the breadwinner or the primary individual in the home is the one that really, considers buying the life insurance or considers what the damage is if they do not have life insurance. And in reality, you see that it's the spouse, it's everybody involved in the family that takes care of the family that needs life insurance or has some sort of insurable interest. And so that's really the takeaway that I got from this document, and I think it's something really good to share with your existing clients that you may have already sold some life insurance to, but maybe it was just to one of the spouses and wasn't the other. This really creates the awareness that both individuals in the family really do provide something that is considered an insurable interest, and it's really imperative that both lives are covered, especially when there's children involved. Even if it's term insurance and not necessarily the index universal life that we are looking to promote through the IFL program, you're at least creating opportunities to write some premium and create more opportunity to help the families that you're visiting with on a regular basis. So I thought this was a great piece. There's another good piece here called 10 Questions for Boomer Esiason, and it's spokesperson. It talks about him being a spokesperson, and for 14 years, he's of course been a quarterback for the NFL, playing for the Bengals, the Jets, and the Cardinals. But now he's a broadcaster, and he's really also focusing in on some of his charities, and he has a passion about life insurance awareness, and so that's really what kind of drove him to choose to be a sponsor here for this particular Life Insurance Awareness Month in 2013. So this is a great piece too, because it talks about things like how did your mother's death impact your family, and no one is ever prepared to lose a parent. It really just turns your life upside down and changes things forever. My dad never expected to be working and raising me and my two sisters as a single parent. That's really what it boils down to, and you have to think about not just the financial, but the emotional impact that the loss of a loved one could have on a spouse, which could directly impact their ability to provide for their children. And again, life insurance really is that cushion and that nest egg to help them get through both the financial and the emotional times that come with the loss of a loved one. So stuff like this really creates great conversation. I want to encourage everybody that's a member of the IFL program sitting on this presentation to take a look at this type of stuff and really leverage it to create new conversations, even with the clients that you've already written something else on somewhere in the past. So again, you'll get this material at the end of the presentation. Just keep your eye out for the follow-up email, and we'll send it on through to you. Now, the next thing I want to do real quick here is I want to talk briefly about the Educator Lead program. So for those of you that have just joined IFL, we welcome you. You're going to find that this program is powerful in terms of creating awareness about supplemental retirement planning, but also about just generally creating opportunity for you as a estate or financial planner. And this lead program that we've rolled out here is focused on educators and people in the educational industry. So that could be anybody from the janitor or the bus driver all the way up to the teacher or professor at a college level. So we cater to the K through 12 or the college and university employees. And we've had the program out now for many weeks. We piloted it originally, and then of course we rolled it out to our IFL members exclusively. So this is a program that up until this point has been exclusive to IFL members, which really gives you an edge. And we've had great success. It's one of those things where I've been doing lead generation for over 10 years, and I've never seen such an effective program. And what it boils down to is the way that we're driving these people into becoming a lead, into becoming the name and the phone number and the email that you receive after you put your money in the program. And many of you on this call have probably done lead programs for years and years and years, and you'd be happy with even reaching 25% of the people that you talk to. Well, with this program, we're reaching well over 80%. Just about every single lead that you receive is going to be somebody that is expecting to hear from you. They are awaiting your call. They're individuals that want to know more about life insurance, and the transition for us to get from even basic term life insurance quote requests into supplemental retirement plans has been very, very easy. This is a demographic that has 403B plans. This is a demographic that is undereducated about retirement, and it's just been very, very effective as a demographic for us to really focus in on trying to talk to them and educate them more about the other side of life insurance, the retirement side of the life insurance program. So if you haven't joined the lead program, I definitely encourage you to do so. And I want to real quick pull up the lead price grid just to show everybody kind of how this works. And for those of you that are already in the program receiving leads, sorry, this is probably a little redundant for you, but it's important for the new folks here on the call today to take a look at this just real quick because it, as you know, is truly a great program to be a part of. So what we ask you to do is we ask you to make a deposit for a territory in your area of a minimum of $500 and a maximum on your first try of $1,000. Okay. Now, after you've done this for a little bit, or you've at least bought one round of marketing in the area, we recommend that you expand, and of course, at that point, you can put more money in the kitty, so to speak. But at the first go, we ask for anywhere between $500 and $1,000, and the way it works is, you'll give us your territory that you're working in, and we'll start marketing into that area at all the schools, colleges, and also some municipalities like fire departments. And you'll start receiving leads within 2 to 3 weeks, sometimes a little bit longer depending on the area or how remote it is. But once you start receiving them, they come in a nice volume. And the leads are going to be priced based on this grid that you see here. So what we've done is we've broken it down based on the level quality of the demographics. So the individuals that make a higher income, or they have a more consistent job, they provide more information on the lead form. Those are the leads that are going to charge you somewhere around $30 or $35. That's the college professor, that's the administrator, the health professional within the school or the university. But also, we boil it down as the grade goes down, so to speak. So the individuals that are considered classified employees, the bus driver, the security guard, the maintenance individual, the janitor, the paraprofessional, those leads aren't necessarily going to be as expensive because, in turn, they're not necessarily going to be able to afford as much. And so we wanted to keep the economics per sale really at the proper scale. So what we found so far is we've generated well over 500 leads. Astonishingly, we've only had somewhere around 4 or 5 total credits that have gone through. That means that out of over 500 delivered leads to our agents since we rolled this out a few weeks ago, there's only been a handful of leads that have had to be returned, and that's a huge statistic. And that's talking about the information that's no good, or you can't get a hold of the person because all the email and all the contact information is bad stuff. So that goes to show you the quality of this program, and that's truly important, because at the end of the day, you get what you pay for the most part. But in this case, at the average cost per lead of about $23 to $24, you really are getting something for your money. You're getting more quality than you're going to get for any other lead at that price. Now, some of these areas are starting to fill up. These are, of course, this is a program that really started to take off. You've been hearing us talk about it a lot. So make sure that if you are interested, you talk to your Brokers Alliance contact individual over here. Let them know that you're interested in the program. They can take a look at the territory, see what's available for you, and hopefully get you in there before it gets filled up. Once we reach capacity with a territory, we're not going to overload it, because we want to make sure that you are getting leads that you pay for, and you're getting them on a regular basis, not one at a time. So if you are interested, make sure that you jump all over this thing, because this is truly one of the best programs I've ever seen. And we are going to keep pressing forward as the school year starts. Things get only busier for us with regard to this program. So it's perfect timing to get in and really finish off the year strong with some contacts that are looking to really talk to you about life insurance. So I'm going to shift here real quick into a couple of points about the social media. And there was a really good article that came up here. I'm going to open it up through Market Watch. And it leads me into a great conversation piece that, again, this is all related to other ways that you guys can market the existing clients, the person sitting next to you on the bus, the in-laws that are coming over, the friends, the family, everybody that you know that you can talk to. They all share a common problem, and that's retirement savings. So, leveraging this type of current events and this type of third-party media is really important, because it allows you to step out of the box of you being the insurance salesman trying to talk to them about retirement planning. this is you sharing common information related to what you do for a living, and allows you to expand upon it and show these individuals that you know exactly how to solve the problem. You have a great solution, and it only takes 10-15 minutes for them to look at the calculators. So there was this Market Watch article that came out here August 15th, so a couple of weeks ago, and it talks about 401k savers being confused and distressed, and retirement plans are more confusing than healthcare benefits. And what was really interesting is they said more than half of the 401k savers said their plans investment options are more confusing than their healthcare benefits, and 57% said they wish it were easier to choose among their plan investing choices. Now, this plays right into what we talk about every single week. If you think about it, most individuals that are looking, over 57% in this particular study, but most individuals in general, with all the studies that we've seen, going back to the Frontline video, we have the 60 Minutes video, the employee benefit research, all of this information is pointing to the fact that these plans are underperforming for the most part because people are not in the right investments. Now, you can look back at the S&P this year and say that it's made over 20%. But you can talk to a client that has a mutual fund and they've earned maybe negative, they've earned maybe just a couple of points because they weren't necessarily following the market. They were just in a particular fund that they chose at some date somewhere in the past. So the confusion within these plans means that people are guessing. They're guessing at the options that are available to them. They're guessing at what they should be investing in. And at the end of the day, that's going to end up in low rate of return. If you weigh that against the fees, you really do have a volatile situation there. And that ties into what we illustrate with our IULs. That ties into what we talk about when we're discussing fees and we're discussing the comparisons to these traditional plans, because this is the leverage point right here. This is the validation that what you're showing them is legitimate. So what was interesting is we took this article and we took just a simple little concept. IULs do all of the investing for you during your working years and throughout your entire retirement. You never have to stress about where to put your money, and you eliminate all of the taxes during retirement. What can be more stress-free than that? And you give them the link to this article. So this little piece right here, and we'll put this in the follow-up email, this is a great little piece to use as a Facebook post, as a LinkedIn post. You can use this in Twitter if you are out there tweeting. You can put this in an email. You can tie this to a flyer, a postcard. This little bit right here is really powerful because, again, it points to the fact that we all are guessing within our 401ks. We're all guessing within our 403bs. At the end of the day, the insurance companies take the guessing out of the equation in these index universal life insurance contracts. As insurance professionals, we're going to help our clients make the right choice, and we're going to educate them about what the choices are to allocate their money to. And that's an annual point-to-point S&P, or that's an annual point-to-point Dow, or that's the monthly averaging option in the index. But at the end of the day, they're not choosing equities that could lose them money, and they're not choosing investments that are overly complicated. Okay? And we educate them with our presentation about how these indexes work. So the client comes out understanding what they've got themselves into with index ULs, and they don't have to pay attention to the day-to-days. At most, we have to meet with our clients on an annual basis to talk about reallocation, and again, we educate them about the choices at the time. If we've been up in the S&P for 4 straight years, you might consider allocating some of or all of their money to the fixed bucket for the next year. Look at the S&P trends. Look at the educational material and the backcasting tools that companies like Allianz provide. And with that analysis, you can help your clients make decisions about reallocation. But at the end of the day, that decision is far less complicated than which 25 mutual funds or which underlying investments are going to make up your 401k or your qualified plan. So again, take this little piece. It'll be a part of the follow-up email here to today's training. But I encourage you to really step out there in the fourth quarter. Go beyond the leads that you're spending money for and start creating leads for free. It's very easy to do. I'm doing it myself. We do it here at Brokers Alliance. It's as simple as getting these messages out and showing individuals that you know what you're talking about. And if it creates even one more opportunity to write an index universal life, considering the type of premiums we put into these policies, it's going to be well worth your time. So I recommend at the very least read this and get it out to some folks and see what the results can be. So what I want to do here to kind of end things today, and again, I like to keep these presentations somewhat short because I don't want to tie everybody up on a Wednesday morning, but I do want to talk about a couple of things that were brought to our attention in the presentation that just kind of created some questions from advisors, and some of it ties into a new version of the presentation that'll be available in 2014, but I want to quickly get into this stuff here. Now, before I show the presentation, again, for everybody that's attending the presentation right now, this training call, if you have anything that you want me to cover before we hang up today, please click on that chat button, send it off to me, and I'll make sure that I get it here, fit into the program or to the call today here before we wrap it up. But I want to make sure that you understand that if you at any point, even after the call, have something you want to see covered in these training sessions, please do not hesitate to email me directly. It's eric.palmer@brokersalliance.com. You can put the chat through here, or you can send me an email, or you can contact your Brokers Alliance team and let them know what you want covered, and we will truly try to get it fit into these calls here, because I want to make these as effective as possible. So a couple of questions came out about a few of the slides in the manual play in our presentation, so I want to start there here today. And I'm just going to pull up the generic infomercial version, but I'm going to flick through a couple of slides. I want to talk about a couple of things here. So when we get into what IULs are, I'm going to try to find this slide real quick. There's a really powerful slide in here that talks about the lock and reset provision. And hopefully I can find it before let's see. Of course, now I've got to go back. I should know better. So it's the slide here that I'll find here in just a second that's directly related to the lock and reset provision. And the question that has come up a couple of times here now from a few of our IFL members has been related to whether or not the years or the date range that we're using is appropriate. So in the particular slide that I'm thinking about now, we talk about or we use the date range of I believe it's 99 and 2010. Of course, I'm trying to skip ahead as fast as I can through this to get there. But the main drive behind that is not related to necessarily related to the date range, okay? So let's stop looking at it from the point of view of it ending in 2010, because clients may say, well, it's 2013, what about the data from these previous years? What's important to note about that slide is that the lock and reset feature itself is securing the returns for the client even in a down year. And the point behind it is really to focus in on the graph where you see in down years when you're tied to an equity, that trend line is going below zero, so you're losing money. That's really the focus there on that. If you take a look at the lock and reset graph, even if we put our two thumbs over the dates, get rid of the 2010 altogether, the point that you're driving to the client with that particular slide is that in those down years, the IUL takes a flat line, okay? And we know that there's a cost involved. We know there's cost of insurance, but that's something we address when it comes to making our comparisons, because there's a cost to those mutual funds and there's a cost to those traditional plans. But again, the takeaway, if I can get to the slide here, the takeaway for that slide really is to focus in on the fact that lock and reset provision prevents those downturns and really locks in your returns. So I'm trying to get there as fast as I can, but of course it's probably going a little slow on the presentation for you. Here we go. This is what I'm talking about. Okay. So here again, the data actually ends in 2011. So again, when you get to this slide, this is one of the most important pieces, and a lot of times you can skip right to this one to make your point. People have argued that over the last several years now, the S&P has been up. It's been skyrocketing. And if you've looked at some of our social media pieces, you'll see, or John Illick's daily summaries of the market, you'll see that even on an annual basis, we're up 15% year to date. Fiscally or over the last 12 months, we're up, I believe it's 17% in the S&P 500. But these upward trends have large downturns, and historically we always see that with the S&P. So in those years, this is what this slide is really driving. It's driving the fact that these flat lines are preserving your gains. And this differential after a 10 or 15 or 20 year period of time is really what the point of this slide is. So zero market loss and lock and reset is the education point behind this. Don't let your client get tied up in the date range, okay? We didn't select this date range to make it look good. In fact, it would just look, like the S&P was back up here, and you would still see a differential between the two because, remember, we'd still be gaining huge here if you add the last couple of years where the S&P was up. Our caps would be hitting 14%, depending on the product. We'd be up here and trending just along the same lines as the S&P. So, that's important to note. I wanted to kind of cover that part, and that also ties into. I'm going to open the presentation back up here. It ties into the calculators as well. We've had the same questions about the first S&P 500 calculator, and again, I want to focus in on the fact that in our next version of our presentation, we're of course going to update the data as it's become now available since the time that we built this presentation. But don't focus so much on the date range. What we're focusing on is the story. And the story is that if you put your money in any sort of a device, forget that this says S&P, anything that can take a negative number within the calculation, then what you're going to have is you're going to have a worse result than a device that does not take a negative number. I mean, that's really simply the point behind the first half of this calculator, is that the 0% floor is far more powerful than the cap. So yes, I can earn 30% 1 year in an equity, but I cannot lose 30%. And when you look at the historical numbers, you're always going to have a major difference between a capped floored product versus having just equity gains and returns. And yes, you can get those deductions with traditional plans, but most people do not reinvest that stuff, so that's kind of a moot point. We're not talking about dividends here either, because then you get into a conversation of taxation and fees and costs. So really the direction here is zeros are really truly powerful. The average rate of return and the actual rate of return side is also important because people are getting averages on their statements. They think that their 401ks are averaging 20% or averaging 10%, but show them what the actual rate of return is. What did they start with and what do they have now? That's an actual rate of return when it comes to cash dollars that end up in a bank account. Now we have a few questions that have come in here, so I'm going to quickly open those up. Let's see. We have a couple questions. What's the first thing you say when calling a new lead? Well, I'm going to pull something up here real quick and show everybody. If you're specifically talking about things like our educator lead program, for example, we've got some scripts that we've put together that are actually introductory scripts that help you either ask for the appointment or create more conversation within the call to get some details about what the individual is looking for specifically in their life insurance. So I've opened the script up here on the screen. If you don't have a copy of this, just let us know. Either send an email to myself or send an email off to your contact here. We'll make sure we get it to you. So we, hi, may I speak with so-and-so? This is, Eric from the National Educational Services. How are you today? So we've got the intro down. We've got the qualifying questions. And we have another agent phone script. So there's one if you have an assistant or appointment setter. There's one also if you're calling yourself. And then we've created another version of the script if you are, calling in a sort of over the phone basis versus looking to go get the appointment. So if you close sales over the phone versus traveling, that's the difference between those two scripts. Other than that, there's a couple of different ways to open up. If you're buying these leads outside the program I just mentioned, outside the Brokers Alliance lead program with the educators, then your open up to your call is going to be, first of all, identifying who you are and why you're calling them. So the most important thing that we found over the last 10 years working with our call centers and our different lead generation programs is that you have to identify and establish immediate credibility within the first 10-15 seconds of the call, or you're going to get nowhere. So, we like to tell people. We don't like to ask people. That's really important. So, hey, Mr. and Mrs. Smith, I'm calling you because you were on this website, www.quotelifeinsurancenow.com. You requested some quotes. I'm the guy that's going to give them to you. So real quick, I just have a few extra questions. It's that transition that I didn't allow the client to back out of or question or try to get me off the phone because they've got 45 other agents calling them because they went to 45 other websites. So really you want to establish where you came from, who you are, what's your purpose, and get right into what you want to do and what they want, which is a quote for life insurance for the most part when it comes to these lead programs. So that's some of the type of intros that you can do. It's really very simple. Make sure you get a hand on those scripts, and if that was your question and you want to kind of elaborate more, again, reach out to us. Any one of the individuals here can talk to you more about some of those intros, or if I have a moment we can get on the phone, maybe we can talk it through as well. Let's see, other questions that came through. Let's take a look. Great question. For any particular product, really, does monthly dollar cost averaging limit the need to time the market and moving money between fixed and equity buckets? That's a really great question. This is a question that'll come down to an opinion because all we have is historical data to go off of. You never really have the ability to predict whether or not one answer is better than the other. But this is the way I look at it, and I think this is the way a lot of individuals look at it. Monthly dollar cost averaging is a powerful way to leverage the different date ranges. For example, there's always the summer lulls. So quite often we see dips in the summertime, and there's also the holiday lulls. So if I was selling Index Universal Life around December 15th, and we know that a lot of times the market responds around the end of the year, but I may or may not be putting the client in the proper bucket, so to speak, to be taking advantage of the high points, the fatter points, I guess, if you will, or the broader points between the start and the end date of the S&P when they buy their product. So by putting premium in monthly, the insurance companies are therefore purchasing their bonds and then striking their options monthly with those dollars. And so your client's money ends up being spread across 12 different buckets, which gives them 12 different opportunities to find those high points or those best performance points in that 12-month period of time. So it is very effective, the dollar cost average, by using monthly premiums. Now, whether or not you still don't want to time the market, you still want to pay attention, because at the end of the day, the down points, even if we look at this calculator here, it could last several years. We saw 99 to the 2000 range here, or 98, I should say, to 2000. We see it again, of course, that what we went through in 6 to 8. So there's points where it could carry on past 12 months, in which case the dollar cost averaging wouldn't make a difference, because you're still taking all those downturns and all those 0 years where you potentially could be allocated into some fixed asset, not maybe all of it, but some of it, and earning at least 2, 3, 4 points. And remember, these fixed rates trend new money rates quite often when it comes to the interest rate trends in the economy. So as we see interest rates go up, our fixed rates may become more attractive, and it may be a reason even more to start hedging and putting a little bit of the allocation towards the fixed bucket anyway. So hopefully I answered your question there. Again, I'm open to chat more about it if you want to get in a little bit deeper. Let's see. Single page updated. Question came in on getting maybe a single page updated graph with the S&P to date rather than building it into the presentation. We'll see what we can work on. North American is one of our strongest index UL companies. If you're not riding with them, you should be taking a look at them. And of course, your contacts, your internals for life insurance quotes here at Brokers Alliance can help you make some quote comparisons. But those companies have up-to-date S&Ps. It's just branded to the insurance company, but they are powerful pieces. They are up-to-date with the data, and we can make that available. You can also find some of that on IULuniversity.com, which you have free membership to as a IFL member. So that stuff is available in like the one-pagers or the printouts. It's just going to be a little bit of time before we can get it into the presentation here. great question. That's really powerful stuff. A lot of times our clients want to see the numbers that are relevant. Just remember that quite often we can still tell the story, even if we're going to 11 or 12 instead of all the way to 2013 numbers. These are all great questions, guys. Really appreciate the participation. Looks like I've covered all the questions here at this point. Again, if there's any more, please don't hesitate to email or give us a call directly if there's something you want us to cover here in the future training sessions. So from me to you, I thank you for your business. I appreciate your participation in this program. Hopefully you're finding these trainings effective and useful. The material that we're putting out, I have to encourage everybody, please start using these daily summaries. If you're not getting them, just go to our website. You can get them right off of our Twitter feed and download them every day in PDF format. But this is great stuff to help you talk to clients and also educate you about where the market is so you can be more effective in the home. So good luck to you out there. Happy Life Insurance Awareness Month. And if you have anything or need anything from us, just let us know. Thanks so much.